Hello traders, this is a very special video. You're going to see me trade two different strategies side by side. I did not intend to do this morning, but I saw an opportunity and I took an experimental trade. I'll explain exactly what that means. I only traded with one single share, so because it was an experimental trade, I'm not going to go full position size or put a lot of money on the line. And I also did my normal small cap trade. So this is day 15 of the small cap market open test trading. What is that? So I've written a plan to trade small cap stocks and we're testing to see if it's profitable. I'll know after I take 100 trades. Since I don't know if it's profitable or not, I'm only trading with one single share. That way I don't put a lot of my account at risk. And let's take a look at the screener and I'll show you how I pick those stocks to trade, not the markets page, the screener page. How I pick those stocks. So here's my small cap screener. Click these three little dots, click modify, and then I organize the list by volume. You must click those three dots and click modify, otherwise the filters will not be applied. That's extremely important. Then I'm looking at just the stocks on the first page because those have the highest volume. I want to see a percent change of 5% or more. I also want to see volume of 500,000 shares or more right at the open, so that it is very different than what you're seeing now because it's an hour and a half after the open. And let's take a look now at the video. So the first small cap that popped up was BBIG, and you can see it meets the daily chart criteria. It's trading above the 200 MA, so it can stay on my charts page. And then I mark out the previous session high. I need to see that broken before I can possibly look for an entry. There's some other criteria that must be met. You'll see that on the trade that I took. And at this point, I'm also noticing that the SPY was ripping up, and this alludes to my experimental trade. It was not with SPY. You'll see in just a moment what happened here. So here I pull up SPXL. So if you watch my swing trade videos, you know that I like to trade or swing trade SPXL, but I'm not in a trade with it right now. So that leaves it open for the possibility of day trading, and I have day traded it in the past, inadvertently actually, but when I was doing that, it kind of sparked an idea in my head about possibly day trading SPXL under certain criteria, and it seemed like those criteria were being met today. Again, this is very experimental. This plan is very informal. It's kind of more of an idea, but there is some criteria already built in, and I, of course, followed the 3 strikes you're out rule. If I lost 3 trades, I would just stop trading it no matter what. So this is not something I would recommend new traders to do because you're probably not going to be able to control yourself if things go south. But again, I've been trading for a while now. I've developed a decent amount of discipline, and I committed to giving myself 3 tries with this SPXL trade, and the third trade was the one that actually worked out and let me, make a decent profit relative to the other 2 trades that I lost on it. But there was also some things that I could have done differently that would have avoided even those first 2 losses, and it would have just been a one and done trade. Is that going to work every day? I don't know. Well, I know it won't work every day, but will it work every time these criteria are met? Again, I have not traded this enough to say, so this is not, I'm not presenting a plan that is guaranteed to be profitable here. I'm just showing you an experimental trade and kind of a planned trade on the fly. So let's fast forward a little bit and see what happened. So I'm noticing that the SPY and SPXL, because they follow the same patterns here, is making a nice ABCD pattern. That's the whole idea behind trading SPXL. A day trade, not swing trading, but day trading SPXL is using my favorite pattern, the ABCD pattern. I have a video. If you search from the YouTube homepage of Trading Armor, you'll find that video very easily. It's all about my favorite pattern to day trade. And what this is right down here is point A, then the high is point B, and then point C will be established as soon as a 1-minute candle makes a new high after a pullback. And that's also exactly when I enter, when a 1-minute candle makes a new high after the pullback. So that's what we're going to see right now. So just waiting for this candle to break above the high. So the high of this one's 114.87. So if I see 88 or 89, anything higher than 114.87, then I get in. So there you go. You saw 89 pop up, and then I got triggered to take an entry. At first, I was trying to cancel the profit target because the idea behind this trade is to follow up the ABCD pattern with a stop, and I'll explain that as well. But for whatever reason, Webull wasn't letting me cancel the target order. I'm sure I could have modified the order and got rid of it, but it just didn't matter because it was so far away. It was like it wasn't even there. I didn't have to worry about it accidentally getting hit or anything. So we can just move on from there. And of course, the stop loss goes just below the previous candle that I entered on. And here comes my small cap day trade, AEHR. So let me just show you that on, let's see, where I checked it on the daily chart. Should be coming up here right now. Here comes AEHR. There you go. So you can see, well, this isn't on the daily chart, but I did check it at some point on the daily chart right here. Here we go. Yeah, so you can see it's trading above, obviously it's in an uptrend, trading above the 200 MA. So I'm not trading against the long-term trend. And now I'm marking out the, well, I just noticed that this is the pre-market high. We've broken above that level. And it looks like we made a new high and we've made the second high. So that's why I'm putting out that yellow line. That is my kind of final trigger to look for an entry. So I've already been triggered to look for an entry. I haven't been triggered for the entry yet. It's when a 1 minute candle makes a new high. And you can see here's the high of the previous day. So I'm marking that out just to confirm that everything is going according to plan on this stock. And then you can see that, so this is the previous high. That's that yellow line. This is the first high of day. Now it broke out through that first high of day and made a second, or it's making a second high of day. And my entry is going to be the first 1 minute candle to make a new high after the pullback from the second high of day. So that's what we're looking at here. And then even though this was a green candle, this is still a pullback because you could see that this candle here went all the way up to 1486 and this one only went up to 1478 or so. So I believe I was looking for 1479 or more. So there we go. Get in at 1480. Maybe it was 1480. I'm not sure. And then I move my stop loss up to the low of the previous candle. That's extremely important because these stocks can turn around and flush on you in no time. And if that stop's not in place, you could be taking a much bigger loss than you need to. So now we're in that trade. And I think, yeah, so now you're going to see me use my 2R calculator, which comes in very handy, especially when you're trading multiple things at once. And I'm putting my entry, my stop loss in, and it spits out my 2-hour profit target. If you're interested in that, you can get it from patreon.com/tradingarmor, as well as spreadsheets, other trading calculators, and trading plans. So now, if this one stops me out, which it does, the first trade does stop me out here, then I get back in as soon as a 1 minute candle makes a new high. So we're going to see that in just a moment. SPXL just stopped me out. That was trade number 1 on SPXL. So I could take up to 2 more trades. And now that these, I've finalized the small cap stock that I'm going to be trading, I was able to just put these on 2 side-by-side charts. So now everything's going to be much easier to see. And you can see that it looks like, yeah, there we go. AEHR stopped me out. So now I'm just waiting for a 1 minute candle to make a new high on that one. And same thing on SPXL, on the next 1 minute candle to make a new high. I get back in. Same thing, move the stop loss to the low of the previous candle that I entered on. And this will be trade number 2. And this is where, I think the 1 minute chart is not very reliable on these S&P 500 ETFs. But again, I don't have enough data to prove that. It's just what I've noticed. So, and we'll see that that's what happened today, that the 5 minute chart was much more reliable. The other thing I don't think I mentioned yet is that the only reason I took these trades is because it looked like the S&P 500 was trending. If it's just kind of chopping around or trading within a range, then this type of a trade is not a good trade to take. So you could see that the price was trending up and now it's pulling back, and it was also trending up overnight. So that's the other thing. And on my AEHR trade, I think Okay, so here's what happened on this. We missed the ideal entry by just a few seconds. Let me just back it up a little bit so we can see that entry. So I was messing around with SPXL, and again, this is not advisable. If I was trading full position size on these small caps, I would not be doing this because this is extremely risky. I am allowing myself to be distracted by another trade, and when you're trading these small caps, that's not a good idea. So if I was trading full position size, I would never ever do this. But since I'm just trading one single share, I allowed myself to run this other experimental trade alongside. So, but what happened is that I ended up missing this entry by just a second or two maybe. So here it comes. There's the ideal entry, and that's when I got triggered on SPXL. As soon as I realized what happened, I got in on AEHR as well. But I caught a few cents slippage there, about 4 cents. Not that big a deal, but if you're trading full position size, that could mean a lot, especially if it comes back down and stops you out. Luckily, that's not what happened here today. So let's fast forward and see how these trades played out. So again, using the 2-hour calculator. And now here's the thing. I think what I just did there on the 2-hour calculator was put in my ideal entry, not my actual entry, so that I can mark out what the 2-hour profit target would be if I would have gotten in exactly where I wanted to. That way, if the price hits that level, doesn't hit my target, comes down and stops me out, I have to stop trading, because that means that the stock gave me a 2-hour trade, but I missed it because of some error that I made. In this case, being distracted by SPXL and missing my ideal entry. So let's fast forward and check out what happened here. So again, I get stopped out on SPXL. That was trade number 2. So I can take one more trade. And now I switch to the 5-minute chart. You can see here, let's go back for a second here on that 5-minute chart, how all of the trades that I took on the 1-minute chart were part of this kind of downtrend on the 5-minute chart. So if I took those entries on the 5-minute chart, that would be like catching a falling knife, which is never a good idea. You never know where the downtrend is going to stop. So this is just, again, I was trading it off the 1-minute chart, but today is an example of where the 5-minute chart was much more reliable. And I think that's generally the case on these ETFs. Again, I have not tested it, so I can't say that with authority, but that definitely was the case today. If I would have just waited for a 5-minute candle to make a new high after the pullback, then it would have been a one-and-done trade with no losses. But the original idea for the day was to trade off of the 1-minute chart and then to follow the 5-minute chart with my stop loss. So you'll see me actually write in the plan on the chart in just a moment once I'm in this last trade. So there we go. I got triggered the first 1-minute candle. Actually, I guess I missed it on this candle. So I was waiting for this candle to come back to my ideal entry, and my stop loss would be the low of this candle. And then here I'm bringing this red line up to the point where I'm going to say that this trade has failed and that this stock is weak if the price comes down and breaks below that level. So this didn't happen, but if this stock would have stopped me out on this trade, I would have been all done trading my small cap trading plan for the day, even though this would have only been trade number 2, because the stock that I decided to trade would have been weak. But let's see what actually happened. So now I'm on the 5-minute chart here on SPXL. This trade is taking care of itself. I don't really have to worry about it. Again, if I get stopped out here, I would be done with this anyway. So this is just up for your viewing enjoyment, I guess. And SPXL is the focus right now. And let's see here. So here is me writing the plan on the chart. So let's see. Okay, so you can read that. And this is basically the plan for this trade. It's the plan I had in mind. I just wrote it on the chart just for clarity for you and for me while I'm in the trade. So there's no question about what I'm supposed to do. That way, if the price starts moving erratically, I don't get freaked out and do something outside of the plan. I can always look back up here and remember or remind myself what I'm supposed to do. And then it's not something that you have to do, but it, again, makes it very easy if you want to be doing other things or not focusing 100% on this trade that you're in. drawing out the ABCD points really does help just stick to the plan. So here's point A, here's point B, here's point C, and then point D will be wherever this stops. But because these S&P 500 ETFs can give you multiple ABCD patterns, if this continues, this can become the new point A, and that's what happens here in just a moment. And that's what allows me to, and you can see what happened on AEHR. It just hit my ideal profit target, but has not yet hit my actual profit target. Let's hit 1540 now, and there we go. I just got filled, and that trade is over. So that's a nice win on the second trade for the small cap test trading for the day. So I'm ending that strategy up 1R. So now on SPXL, I'm just waiting for the next point C to be established. And let's see here. Excuse me. So now the AEHR trade is done. I can just look at this chart only. And when a point C is established when a 5-minute candle makes a new high here. So that happened here on this, and that's after a pullback, of course. So all of these 5-minute candles are making a new high, but there was no pullbacks. And then on this candle, there was a pullback on this candle alone. But again, it's a 5-minute candle, so that's a lot of pulling back on the 1-minute chart. And so this becomes point C. This is the new point A, point B, and point C. And now, as my plan says, I have to move my stop up to just below that level. And I also wrote on the chart, again, for, I guess for my information as well as yours, is that my original 1R risk was 28 cents per share. So we can keep that in mind when we finally get stopped out of this trade. So now we're waiting for a new point D to be established. So that's looking like that's going to be it. But now it's a whole nother ABCD pattern, because now you've got to pull back on this candle, A, B, and then it goes a little lower in this one. So point C is right there right now, unless, but it has to, a 5-minute candle has to make a new high. So sorry if this is a bit confusing, but here it is right here. So as soon as this happens, so I kind of put that line out there preemptively. As soon as this candle breaks over the top of this one, that confirms that this is point C, and only then does it confirm that. So that's why I did not move my stop up earlier. When I put that line out, I just kind of had that out there just in case a new candle made a new high, and that did happen. Once that does happen, that does become point C, and I can move my stop loss up. And the whole idea here is to catch a larger trend. If you're just following the bottom of these 5-minute candles, you would likely get stopped out sooner. But that's not necessarily the case, but generally it is. So this kind of allows you to ride out some pullbacks and continue the trade higher. So now my stop loss is at 115.79. And it was looking like we might get one more ABCD pattern out of this, but it turned around and stopped us out, I think, on this candle here in just a moment. And once we get stopped out here, we've made 4R off of this trade. So 4 times our original risk of 28 cents per share. We've now made 4 times that on this trade. So pretty good trade. Again, the one thing I could have done better in this case, does not mean that this is going to hold true every single day, is that, just trading it off the 5-minute chart only. And that's something I seem to prefer on these ETFs if I'm going to day trade them. Again, I have not done a lot of day trading with ETFs, but I like the 1-minute chart on the stocks, especially small caps, because they're very erratic and it keeps the risk low. But on the 5-minute chart on an ETF like this, the risk is still very low. and the patterns tend to be more reliable. So that's it for today. And as I said, we made 4R off of that last trade on SPXL, but we lost approximately 2R on the first two trades. So that's up 2R on those trades. And then on that small cap trade, we lost the first trade. That's minus 1R. Then we won the second trade. That's plus 2R. Put those together, you end the day plus 1R on that small cap trade. So I'll go over all of the results of the small cap trading at the end of the week and release the video on Sunday. So check that out. As always, I like to leave you with go into every single trade with a plan. If you're going to do some experimental trading like I did today, again, I don't recommend to do that if you're really new to trading, because it could just open you up to doing all kinds of things. You've got no plan. You just start doing random things. This was a plan that I've been kind of messing around with for a long time, and I did trade like this before. So I knew what I was doing going into it. I knew what I wanted to see, and I came up with a very firm plan on the fly. But I had that in my mind before I started. So, I didn't just blindly take an entry and then figure out what I wanted to do. So that's the point I'm trying to make here, is go in every single trade with a plan. Don't enter the trade and then come up with a plan. That's not going to work. Once you're in the trade, stick to that plan no matter what. Always take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.